Welcome back, everybody. We are here today to give you an update on what's happening with agricultural commodities in the wake of COVID-19. So let's go ahead and do a quick introduction. Tom, you want to take it away?
Okay. Well, I'm Tom Harris. I'm a professor of economics at the University of Nevada, Reno. I have a state extension specialist with the community development and also director of the University Center for Economic Development.
Hi, I'm Malieka Bordigioni. I'm a research manager with the University Center for Economic Development, and I also work on the FAPRI program.
And I'm Mike Helmar. I'm also a research manager with the University Center for Economic Development and with the Agricultural Experiment Station in the College of Agriculture. And I work with Malieka on the FAPRI program.
Great. Well, Steve took a quick vacation. Mike, you want to go ahead and get started and tell us how things are looking?
Yeah, it's been a few weeks since we've kind of visited the ag markets for the major agricultural commodities that are produced in Nevada and talked about prices and things of that nature. And things were looking pretty dismal the last time we talked about them. I'm going to make a general statement here and realize that there are some caveats to it. But generally, I just want to say that there is a recovery underway for agricultural commodities. Now, here's some of the caveats. The ability to sustain this depends on continued improvement and no major spike in COVID cases so that we don't revert back to having to we're still social distancing, but quarantine to the extent that we did before. So what we need are for the things that have been reversing the social and economic constraints that we've had. We need that to continue, including the operation of processing. So we'll talk a little bit about what's kind of behind that recovery that we've seen. And again, it's kind of a shaky recovery, I would say, as everybody who's following what's going on in COVID and who's not following that these days knows that things can turn around rather quickly. In fact, there are some reports from, I think, 25 states now, as of watching the news last night, have shown a surge again in the number of COVID cases that are coming out of things like, I think the Mother's Day surge is kind of past. The Memorial Day, people getting together, and we've seen things on beaches, is with us now. And folks are expecting to see some increase in those cases from the closeness of people actually being together in the protests and demonstrations around Black Lives Matter and George Floyd. Just the closeness that people are together will cause some more of that. In fact, I saw one young fellow on the news. He said that he has been diagnosed with COVID already, and he's pretty sure he got it from one of the demonstrations, even though he was careful with all the masks and things like that, and stay distant. So we're not out of the woods yet, and things, like I said, are kind of shaky and can turn around in a hurry. So that general improvement in agricultural commodities and a lot of the whole economy is still dependent on things in COVID improving. These things, as we've talked about before, are not a social and an economic problem that coming along with those things with things can solve this. We can't solve it with the economy. It's a disease issue, and it just depends on how that thing goes and how careful we are with it. Okay, so having said that, I'd like to talk a little bit about, I want to go first with some cattle prices, and I'm just going to share some graphics with you here, if I can find there we go. Okay, if we look at the feeder cattle prices, and this is one that we've been looking at for quite a while now, back even into March when we first started doing these podcasts, we started talking about the huge drop-off in feeder cattle prices. And if you can see my cursor there, and it's about the middle of March, our feeder cattle prices were down to about $108 per hundredweight. That was lower than they've been in a long time, going back for a lot of years. I mean, it was much lower than about $145 in December and January. And this was supposed to be a year with even improved pricing and profitability from last year. But the opposite has happened. But now, since that period of time, we've had some ups and downs depending on what's happened with the number of cases, what's happening with processing and all. But we're now back up to about $135 per hundredweight for feeder cattle. So what is behind this? Well, a lot of it is just that the economy is starting to reopen because the number of cases has started to come down. We're beyond. I think that we don't need to use the term the curve is flattening anymore. When that curve flattened, even if it flattened at high levels, we couldn't do anything. But that curve is on the downhill side in a lot of places, although we've had some resurgence lately. And so the economy is reopening, and part of that is the processing. People are getting back to work, including folks that work in the processing plants. Some of those health concerns have been addressed there, and a lot of the processing is open. And what that has done is it is starting to put more cattle through those plants, and that increases the demand for cattle through the plants, and then the demand for cattle, the feeder cattle, going into the feedlots, replacing them. If we look at the fed cattle or the slaughter cattle prices, those are coming up too, although they're still pretty low, but those are coming up. So cattle prices are improving because that choke point in the processors has much been alleviated. Not perfect, but it's been alleviated quite a bit. And then the demand is also coming back as we get back out into the world. People are going back to restaurants again. That opens up a different type or more demand for different types of products for beef. And that's all leading to cattle prices improving over time. So I want to show a little bit something to you that kind of supports this. And if we look at our livestock slaughter, what that's coming back, and this is a federally inspected livestock slaughter, which is by and large the vast majority of animals that are slaughtered. We're going to look here at cattle, look here at hogs, and then even chickens. There's been quite a bit in the news lately about poultry, and kind of some gloom and doom sounding around that, but that's been mostly anecdotal. So I went to look at some of those numbers for that, and I'm not sure that the amount of gloom and doom that we're hearing in the media is quite right. Although there is something there that we may want to pay attention to, and we'll get to that in a minute. But if we look at cattle, so what we have is the blue bars are last week, the reported numbers by the USDA. The red bars are the week before last, the prior week, and the green bars are the same week a year ago, which we're kind of using as what normal levels should look like. So our cattle slaughter is up quite a bit from the previous week, and even previous week was up a lot from the week before. I mean, these numbers, if we look at the red bars, we were down, if you can see my cursor, we had slaughter numbers down about where my cursor is, down in the how do I go back? There we go. We were down in the 300 to 400,000 head per week back if we went into March and into April. The slaughter numbers were really that low. But now they're back up within 20,000 or so of where they were at this time last year. So the slaughter numbers are coming back up. Now that doesn't necessarily mean the prices are going to recover right away, because one of the reasons is even though the slaughter numbers are back up, we still have a glut of cattle that wasn't marketed during that period of time, still sitting out there that has to move through the processing system yet before things get back to normal. All right, and then if we look at hogs, we know that the hog processing was one that was really hit hard, those large Midwestern plants. And similar to cattle, we're up from last week, But even last week was much higher than it was earlier on. I mean, we were down to 1 million head or so a week, and now we're up to about 2.4 million head, which is actually slightly above where we were a year ago. So it sounds like most of those plants are back open, although again, like cattle prices, hog prices have not completely recovered because we've got a glut of animals there. We've heard about some animals being shot and all. The number of those that has happened, I mean, that's a kind of we're going to get your attention sort of story. But I mean, we're talking about millions and millions of hogs sitting out there, and we haven't shot that many of them. So we haven't really shot enough to take care of that price issue. And it's going to take moving those animals through the processing system and getting rid of the glut of animals that are sitting out there on the farms and in facilities to do that. Having said that, hogs are a little different animal, to pardon the pun, than cattle. With cattle, we get a cow has one calf per year, generally. Every now and then we'll get twins. Like I saw my pasture sitting out here below my house today. We've got some twins sitting out there, which was kind of cool. My wife was thrilled about it. But with hogs, you have large litters, and there's generally 2 litters per year. So you've got to move that first litter through the feeding process, the weight gain process, and all to make room for the next one. So that backlog has got to be taken out before we can really sufficiently move the next litter through for this year. And then chickens. If we look at the chicken processing this week, we're about where we were a year ago, but below what we were last week. So those chicken processing is kind of up and down, but we're where we were a year ago. Now the question is, was last week where we should be going? And the fact that we're down this week, is that a harbinger of things to come, that we are going to see some reduction in that chicken processing? Or is last week an anomaly? All I can say is we have to wait and see. But right now we have sufficient meat going through the supply lines into retail levels and into restaurants. The grocery store that my wife goes to was limiting purchases of meat to 2 packages per species. So you get 2 pork, 2 beef, 2 poultry, or 2 chicken. That is now ended. And you can buy pretty much as much as you want, although there are some cuts that are off. I think people are still hoarding a little bit. But the limitation on what you can buy has been lifted. So we're seeing, meat prices recovering as we get animals moving through the system. That's kind of where we're at now. And if we continue to recover from COVID, we're good. If we don't, if we go back onto it again, we could see a whole lot of problems like we saw in the past. Now, I wanted to visit it. We talked about that the cattle prices were at about $135 per hundredweight for feeder cattle. And that's not something that we can really be too relaxed about and think that things are good now, because even at $135 per hundredweight for feeder cattle, our Nevada cattlemen and cow-calf producers in other states around, that's not what they're needing to make their profits. They're still going to be stressed financially a little bit this year. So they're not out of the woods by any means. We need to get those things to recover. We need to get through this pandemic. And then I want to talk a little bit about milk. Milk is one that has kind of still got me scratching my head about. And this, looking at this chart, this may be why. Now, the futures prices for Class 3 milk generally reflected pretty close to what the market prices were on those days, But as we moved into June, you can see that those future prices spiked back up to $20 per hundredweight. That's great if the market is going to bear that. I think a lot of that is speculation, because at this point, I don't think it's really reflecting the market prices. Now, having said that, there have been some improvement in the market prices for milk, because we are getting to see, again, like the meat processing, some of the cheese and butter producers and those plants are coming back open then. Plus, we've had some of the for example, like we heard of the CCC is now turned into buying product from producers and holding it. And as what we've seen in the last few weeks is there's an increase in stocks of both butter and cheese sitting out there. So it's not like this is all the demand side that is pulling this back. It's not. It's removing things off the market, so that the prices no longer have to deal with that. So that's taking up some of the slack. Also, and I'm looking at the Class 3 milk futures prices here, because that seems to be the class of milk that we get the best data for, and the most consistent data and most timely data. But I did see the other day that even though the Class 1 milk prices have improved, and that's our fluid milk, and then the all milk prices have improved, this is part of what's got me scratching my head. The Class 1 milk prices, the fluid prices, the most highest priced milk, are at about $20 per hundredweight, just where the manufacturing milk is. So that tells me that either the futures prices, the speculation is off, or that producers have managed to find ways to get rid of their milk elsewhere and have tightened up those supplies. And there is some evidence that has happened. We do have some reductions in some dairy cattle, reductions in the amount that's fed, and so yields are going down a little bit. But to get a $20 per hundredweight price right now, I certainly hope it is. I'm having a hard time believing that. And as you look at the contracts as you go out beyond June, you look at the July, August, September, and even into next year, we begin to see that those Class 3 milk futures prices begin to get eroded. I mean, we go from $20 in June, 18, 17, 16, and then down on about $16 per hundredweight for contracts, all the way out through early 2022. So the expectations aren't that that milk production and milk producers are going to be made whole. This seems to be a short-term speculative deal that's going on here, even though, again, like I said, there is some evidence that the prices have improved because of demand. But this is one that we need to keep an eye on to see if this is sustained. Then I want to talk lastly, and I don't have a chart for this, but I want to mention wool, which is one of the other products that is important to Nevada agricultural producers. And we had a bunch of weeks in a row where wool prices internationally and nationally, and I look at the international prices, the Australian prices, because they kind of set the tone for the world, were down week after week after week. Again, fitting this observation that a general recovery is out of way for a lot of ag commodities. Wool prices in the last few weeks have turned back up, not by huge amounts, but they've turned back up, so that the Australians are now being able to find markets for their wool. And when they find markets for their wool, the rest of the world follows. And one of those markets, one of the major markets for them, is they are big in the Asian markets, particularly the Chinese market. So that is risky. If the Chinese market is what's pulling that up, will it be sustained? The Chinese don't often sustain a lot of things that they do. They jump in, jump out of markets. But if the Australian wool prices are going back up, that's a good sign, and that buoys wool prices for Nevada producers as well. But wool prices are still pretty low. So generally, we see a recovery going for all the major commodities in Nevada. We didn't talk about alfalfa hay. Those prices have been pretty stable over time, although the USDA has only come up with prices through April. May was kind of one of those periods of time that I was looking to see something happen as we get cuttings going on there, and whether those prices were going to go up or go down more seasonally than they normally do. My suspicion is that if we're improving dairy production and things like that out there, that we may hold on to some of those hay prices. But it remains to be seen as what the data is going to tell us. So are there any questions at this point?
I'll ask one real quick for Mike. Mike, just for the public, with the expansions like the casinos opening and all that, restaurants, what does that mean? Like you say, the different cuts of meat, all of a sudden you get higher end. How is that translated to cattle prices that the public needs to know?
Well, there's a couple of ways that this happens, and it's beyond the casinos and restaurants are kind of just beyond just the meat. But we'll deal with that first. You have the higher cuts of meat, and they're higher valued as well. And so what's been happening when we reopen and we're supplying grocery stores, which are different cuts, different packaging, some of those supplies of the higher end meats, we started to get a glut in frozen storage and all that, and that was constrained. Now we start moving that out. It's just part of that general increase in overall demand. We don't have to store as much. We're moving that out. And the cutout values, that is the value of all the cuts, begins to rise because those are some of the higher prices. So at the retail level and the producer level or the processor level, those profits begin to go back up. And then basically in general, we eat more beef when we go out and more meat when we go out to a restaurant. We'll get that big. We won't be eating that little 8-ounce steak. We'll be getting that 22-ounce ribeye. Right? At least I do, but yeah. But we eat those sorts of things, higher price and larger quantities. So that kind of pulls up not only the value of the meat that's out there being consumed, but also the quantity as well. Restaurants also do one other thing, and that's part of what's behind some of that dairy, some of the dairy things we're seeing. Particularly when we go out to restaurants, we eat more cheese in restaurants. Italian restaurants, Mexican restaurants, and other restaurants that have a large amount of cheese in them as well, but also butter. I think folks consume more butter when they go to the restaurants than they do at home. In fact, a lot of folks at home may consume margarine as opposed to butter or some both. But you go out and with that big steak, you've got that big baked potato. And boy, you put butter on that, or at least I do. And so things like butter, sour cream, things of that nature are consumed more too with the restaurants and casinos opening.
And with the higher class 3 prices, I know public is aware of the DFA plant in Fallon. What potentially would that mean for them?
Well, if those class 3 prices are really doing that, it means that their costs are gonna go up. Now, but it means that the producers in Fallon, the dairymen in Fallon, are making more money. But that is a cost on that plant in Fallon. Now, if the international markets are moving enough, and the domestic markets are moving enough to raise those product prices in there, then they can look at higher class 3 prices that the plant has to pay for. But it does erode, all things equal, it does erode the profitability of that plant.
Good enough. That's all from me.
Mike, while we were talking, the governor announced some reopening protocols for public schools. So it sounds like fluid milk might be coming back within the next couple months a little bit.
Yeah, that's possible, but I mean, let's talk about the timing of that. Right now, we're in a period of time when we normally don't have those big breakfast and lunch things. I mean, that's just a seasonal weakening factor. But having said that, the question is when are those going to reopen? And are we still going to be prosperous? In fact, the Washoe County School District just announced they don't know exactly what they're doing yet and what dates that they're doing it. So yes, you're right. That will certainly bring in that very important component of fluid milk demand. It'll bring that back. But when it happens remains to be seen. Will it be at the end of August, which is normal? Depends, again, what happens with COVID. We just have to wait and see.
Yeah, it looks like guidance is being issued. So I think you're right.
Yeah. Yeah. And that guy, it's important to have that guidance there for when things happen. It's important to have a plan in place and perhaps several plans in place, contingencies, so that when it happens, we can, you know, hit the ground running as much as possible. Yeah.
Great. Well, thank you so much for the update. Any last questions?
I got one just for maybe both Mike and Steve. I was at a meeting and you get slowly getting it in the press, this worry about the drought coming on. Any of y'all, both of y'all, I know both of y'all deal with ag prices and all. Any speculations of what that might mean to the Nevada ag sector?
I'll take a crack at it first, Steve. Well, as we look at agricultural crops in Nevada, we have a drought forming. We do have a drought coming on, D0, D1, and I don't know that anybody's entered D2 yet or not. But if we look, let's look at hay, let's look at our vegetables and fruits that we produce in most places in Nevada. Those are irrigated. And at this point in time, the water supplies, particularly the surface water supplies, reservoirs, are adequate to get through this year. Now, we know what happened with the last drought. If we go back 6, 7 years ago, and then 5 and 4 years ago until the drought ended, that's when we really got stressed, was after several years of drought and our supplies went. Now, in the parts of Nevada where they depend on groundwater for irrigation, some of those have been going on for a long period of time, and I don't know if they've replenished that. But if we begin to see our groundwater levels dropping, again, hopefully they're adequate this year, that irrigate with that in those areas, particularly over with some of the hay over in more eastern Nevada, then they could be in trouble. But this year, by and large, for crops that are irrigated with surface water, and that's almost all crops in Nevada, particularly in our area, Fallon, Fernley, that area, we should be okay this year.
Thank you so much, Mike. Any last questions? All right, we'll check back in another week or two and provide another update, and we'll get this online here pretty quickly in the next couple days or early next week. Thanks again to everybody. Really appreciate all the information and the updates, and we'll talk next time.
Thanks, folks.
Thank you.
Bye-bye.